Here's a summary of the UnitedHealth Group, UNH, 2026 Q1 earnings call, focusing on key financial metrics, management commentary, and future outlook. Introduction and overall tone. The call began with the standard introductory remarks, emphasizing forward-looking statements and the availability of non-GAAP reconciliations. The overall tone from management was cautiously optimistic, highlighting strong execution, progress in strategic initiatives, and a firm belief in the company's long-term potential despite ongoing healthcare cost pressures. Key financial metrics and performance. Revenue. Total revenues reached $111.7 billion, representing a 2% year-over-year growth. This was attributed to disciplined pricing actions and member mix. Membership. Domestic membership stood at 49.1 million, a slight decrease from 49.8 million at the end of 2025. Medical care ratio, MCR. The reported MCR was 83.9%, an improvement from 84.8% in Q1 2025. This was driven by pricing discipline, medical cost management, and favorable reserve development. Operating cost ratio. The operating cost ratio was 13.8%, reflecting planned investments in technology, AI, customer experience, and community engagement. The company expects this to normalize as investments scale and deliver productivity benefits. Adjusted earnings per share, EPS. Adjusted EPS was $7.23, exceeding expectations. Cash flow. Operating cash flow was robust at $8.9 billion, or 1.4 times net income. Debt-to-capital ratio. This decreased to 42.9%, on track to the year-end goal of 40%. Share repurchases. The company initiated share repurchases earlier than anticipated and expects to deploy at least $2 billion by the end of Q2. Segment performance highlights. UnitedHealthcare, UHC. All major business segments exceeded plan. Medicare and Retirement showed disciplined pricing and affordability initiatives in an elevated but stable medical trend environment. Community and State experienced pressures in state-based rate environments but remained within expected ranges. Commercial and ACA performance was consistent with pricing and trend assumptions. Medicaid focused on high acuity care management and cost efficiency, with early favorable reserve development. However, membership attrition and negative margins are still expected for 2026, with modest improvements anticipated in 2027, contingent on appropriate state rate adjustments. Medicare Advantage. Medical trends were elevated but in line with pricing assumptions, driven by continued service intensity and provider billing patterns. The company is actively addressing these trends. Optum Health delivered strong results, reflecting operational improvements and disciplined value-based care practices. Adjusted earnings were $1.3 billion, driven by pricing and operational improvements from the latter half of 2025, as well as actions to improve contracts and reshape the value-based care portfolio. The company aims for sustainable margin levels of 6% to 8% through operational focus and value-based care. Significant improvements were noted in specific regions due to data-driven clinical navigation and earlier patient intervention, leading to reduced inpatient and skilled nursing facility admissions. Fee-for-service businesses have seen increased managed structure and accountability. Optum Rx onboarded over 800 new clients while reducing call center volume through self-service. The pre-check prior authorization capability significantly reduced prescription approval times and denials. Utilization and drug cost trends were as expected, with a slight year-over-year decrease in scripts. Optum Insight. AI-first products are gaining traction, with initiatives like Optum Real and an AI consulting arm showing promise. The acquisition of Allegis Technologies was announced, expected to be accretive in 2027. Management's forecasts and future outlook. full year 2026 outlook, updated to greater than $18.25 per share. This outlook balances Q1 performance with a prudent approach to the remaining year. Earnings cadence. The company expects approximately 2/3 of earnings in the first half of the year and 1/3 in the second half. This cadence varies by segment, with UnitedHealthcare and Optum Health weighted towards the first half, and Optum Insight and Optum Rx weighted towards the second half. Medical cost ratio cadence. First half MCR is expected to be over 250 basis points below the midpoint of the full year guidance, with second half levels over 200 basis points above. Medicaid, negative margins expected in 2026, with modest improvements beginning in 2027. State rate alignment to elevated medical cost trends is crucial. ACA business, expected to contract by approximately 1/3 in 2026, with a focus on bronze and gold tier products. Medicare Advantage, membership expected to contract by around 1.3 million. The company appreciates the Trump administration's alignment of funding with increasing healthcare costs in the final rate notice for 2027. AI investments, remains on track to invest nearly $1.5 billion in AI-related initiatives in 2026. These investments are expected to drive efficiency, improve member and provider experiences, and create opportunities for commercialization. Conservative return of 2:1 is expected on internal AI investments over the next few years. Significant risk factors, elevated healthcare cost trends. This remains a persistent challenge across various business lines, particularly in Medicaid. State-based rate environments. Medicaid insufficient funding relative to elevated medical costs poses a significant risk to profitability and sustainability in Medicaid programs. Regulatory and legislative uncertainty. While specific legislation, like PBM, has been considered, ongoing legislative and regulatory changes, including potential adjustments to Medicare Advantage risk models, could impact future performance. Execution of AI strategy. While promising, the successful integration and realization of benefits from significant AI investments require careful management and execution at scale. Provider billing patterns and service intensity. These were cited as drivers of trend in Medicare Advantage and are being actively addressed. Competition and market dynamics. While not explicitly detailed as a risk, the evolving healthcare landscape and competitive pressures are always a factor. CEO statements. Stephen Hensley positive start to the year. The first quarter unfolded largely as expected, reflecting actions taken in the past several months to drive consistent performance across each business. Progress in value-based care. At Optum Health, operational improvements continue to take hold as we more deeply embed disciplined, integrated value-based care practices market by market. AI ambitions. We're investing in AI-enabled modernization, and while early in this journey, these capabilities are already improving experiences for consumers and care providers, increasing productivity, and reducing administrative burden. Strategic focus. We have refocused the organization squarely on U.S. health care, exiting non-U.S. businesses. Commitment to mission. Underpinning these steps is the undertaking to deeply re-energize our mission and culture across this company, an effort in which our leaders and people are engaged avidly. Long-term potential. This management team believes we are a long way from performing to our full potential, and we're committed to getting to that potential quarter after quarter and reporting to you on our progress. CFO statements. Wayne Batten's strong quarter exceeding plan. Our first quarter results reflect improving fundamentals and a strengthening of operations across our businesses. As Steve mentioned, all our operating segments exceeded our plan for the quarter, with particular strength in Medicare and Optum Health. Revenue growth and drivers. Total revenues in the quarter were $111.7 billion, reflecting 2% growth year-over-year, driven by disciplined pricing actions and member mix. Medical cost management. Our reported medical care ratio of 83.9% is a result of pricing discipline, strong medical cost management, and favorable reserve development. Investment in future. The operating cost ratio, reflecting the timing of targeted investments across operations, technology, and care delivery, as well as incremental investments in areas such as AI, customer experience, cybersecurity, and community engagement. Capital allocation priorities. Our capital priorities remain consistent: invest in growth, strengthen our balance sheet, and return value to shareholders. Updated full-year outlook. While it is still early in the year, we've updated our full-year outlook to greater than $18.25 per share. Call out incentive compensation impact. It's very important to recognize in the prepared remarks that these are fully burdened by incentive compensation this year in Q1, and they were not fully burdened in Q1 of last year, comparing $900 million to roughly $35 million. In summary, UnitedHealth Group demonstrated a solid start to 2026, exceeding expectations in Q1 with strong revenue growth, improved medical care ratios, and robust cash flow. The company is actively investing in AI, refining its value-based care strategies, and focusing on core U.S. healthcare operations. While managing elevated cost trends, particularly in Medicaid, remains a priority, management expressed confidence in their strategic direction and long-term earnings potential.